Stock markets in Europe are trading cautiously higher this morning, with the UK's FTSE 100 index currently up around about 5 points, while the Euro Stoxx 50 index is higher by just around about 2 points. US stock futures are also tracking a little higher. The Dow is up around about 9 points, while the S&P is currently up just 1 point. In the FX space, the yen is weaker against a stronger dollar. In the commodity space, gold is currently down around about $5. Oil prices are a little bit more lower across the board. Steady would be a better way to describe it. Still elevated, but nothing to be too concerned about just yet. And when it comes to the bond space, both gilts and bunds are currently in favor, ticking a little higher. Good morning, I'm Ishaq, Siddiqi, and welcome to your Daily Market Bite. I'm going to give you a quick idea of what's going on in financial markets today. I'll start off with the overnight session in Wall Street, and we had a decent finish for the S&P 500 and the Dow Jones Index, and that was on the back of some decent economic data. The ISM manufacturing numbers came out, the equivalent PMIs, and they were consistent with the economic growth forecast, that means the pickup in economic growth that we've seen across the globe. Of course, the day before yesterday, we had Chinese PMIs which beat expectations, Eurozone PMIs and UK PMIs, and we found out that the US is also showing a similar sort of strength, with the PMIs beating on the expectation front. Now, going into Asia, however, we did see share markets retreat, and that was on the back of some looming worries about the US's action on Syria, if they are going to take action, if they're not going to take action. Now, it seems like in the US, in Congress, there is a greater willingness by both parties, the Republicans and the Democrats, to pursue some sort of military strike against Syria. Now, of course, we have to wait until Congress reconvenes on Monday, the 9th of September, before we get a full sort of approval or a vote by the US Congress, if that is going to happen. But so far, it seems like senators are on board with President Obama's plans to strike at Syria, and that's got the market feeling a bit cautious about what's going to happen next. So far, it seems like there is enough support out there in the US, and it may seem like the US could possibly strike at the Assad regime in the coming days. So that's got the market a little bit worried, and that's been reflected with some of the deterioration in risk sentiment that we're seeing, which is why we've got a bit of a flattish open in Europe, and we're a little cautious going into the rest of the session. Now, we have had a number of economic data points out of Asia that's given us some direction. We've had the Chinese services sector's PMI, which is actually better than expected, again consistent with the growth that we're seeing out of China, so investors welcome that release. We also had Australian GDP figures for the second quarter, which are broadly in line with expectations, so a decent signing out from the Asian market. Nonetheless, Asian shares were quite worried about the military intervention, or the impending military intervention, I'd rather say, against Syria by the US military. Now, going into the European session, we are a little hesitant to take some bold moves. We've got a number of economic data points today to look out for. These include Eurozone PMI for the services sector. We also have UK services sector PMI. We have Eurozone retail sales, which will be a big focus, and we also have the Fed's beige book later on in the session. Most importantly, we have the Eurozone second quarter GDP figures. Now, we know that the Eurozone in the second quarter managed to get out of a recession. It's a 6-quarter recession ended by the second quarter of 2013. That was the first initial estimate. We got the second estimate. Growth came in at around about 0.3% for that quarter, signaling that the pace of contraction in the periphery is starting to slow, and Germany is doing what it's doing. We're doing do what it should do best, and that's drive the Eurozone economy into the growth zone. So investors welcome that release, and it seems like we're going to get a similar sort of number today. 0.3% are the expectations. So broadly in line with what the market's looking for. However, we possibly could get the number revised higher to maybe 0.4%. If that's the case, we are going to see markets rejoice at that figure. Other than that, there is not much else to say, so I will speak to you guys tomorrow and give you a bit more then. Cheers for watching.